Welcome to this week's What's Affecting Oil Prices. I'm Ashley Peterson, Senior Oil Market Analyst here at Stratus Advisors. In the week since our last edition, Brent crude rose $1 a barrel week close to close, generally in line with our expectations. Brent will likely average $53 this week as the return of normal U.S. activity removes some support. We also expect the Brent WTI differential to trade around $5. In terms of inventories, we expect U.S. crude builds will be around 4.8 million barrels as the after effects of Hurricane Harvey continue to work through the system. Geopolitics will continue to drive volatility, with the few active hotspots that bear watching more likely to hamper oil supply, helping prices. Ongoing tensions with North Korea could lend some support in the week ahead. The dollar's relationship with crude remains strong and will be a positive factor in the week ahead. The short-term outlook for the dollar is weak, potentially supporting crude. Hurricanes in the United States, rising tensions with North Korea, and dovish comments from Fed speakers are all adding pressure. Trader sentiment will be a positive factor in the week ahead as Brent technicals indicate healthy price levels. Traders will remain sensitive to any negative fundamentals, but will be buoyed by reports of ongoing recovery at the refineries impacted by Hurricane Harvey. Supply will be a neutral factor in the week ahead. Production activity rebounded fairly quickly after the hurricane passed through the Gulf, and this week's numbers are likely to show a bounce back that could temporarily pressure prices. Stronger export data as Texas area ports reopen will mitigate some of this pressure. Demand will be a neutral factor in the week ahead, despite remaining generally healthy. Hurricane Irma battering Florida and parts of the Georgia coast before moving inland is likely to pressure demand and prices in the week ahead. U.S. gasoline demand took a sharp turn down last week but remains near the top of its 5-year range on a 4-week average basis. Distillate demand on a 4-week average basis remains extremely healthy and is well above the 5-year max. ARA product stocks remain healthy, with recent builds driven almost entirely by fuel oil as distillate and gasoline are flat to down. Refining will be a negative factor for Brent in the week ahead as runs will continue to increase on the U.S. Gulf Coast, pressuring margins elsewhere. European margins have already given back some of their gains from the Hurricane Harvey outages, but Hurricane Irma's uncertain path of the last week provided a small leg of support. This analysis is part of our short-term outlook. Contact us for more information.